My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 26th, 2021, and Bitcoin is looking like it's completing its 5-wave correction. Finally. Okay. Lots to say, lots to do. Hopefully everyone's safe. Okay, that's the primary sort of reason for tracking price action, so that you're safe, you don't lose your capital, you can, to a high degree of confidence, predict what's likely to happen. Okay, and so you're positioned in such a way to profit from the moves in the market, especially the impulsive moves. All right, we're finally back in an impulsive move, in an impulsive wave. This is where we make money. For all of 6.5 days, right? 6 hours and 6 days and 16 hours, or 6.5 days, yeah, 6 days and 12 hours. It was not a good place for us to trade. Okay, why? Because we were in a complex fourth wave correction, or what we called a complex fourth wave correction. I still believe it's a complex fourth wave correction, but there are certain things that did not happen in this complex fourth wave correction that I expected to, that I anticipated were going to happen, and made it so that I almost lost my entry on my short here. Okay, so I'll talk about that in a moment. But due to the nature of a complex fourth wave correction, the high degree of volatility, the high degree of uncertainty in the wave, and all of the probabilistic sort of moves that could happen, is very difficult to trade. And I will repeat this, and I've almost underlined this and sort of highlighted this in my trading journal. This is a no trade zone for me. This is where I lose money. This is where I take bad bets, because it's not like the impulsive waves. We can use Fibonacci very cleanly, hide our stops, and, with a high degree of certainty, project targets. We cannot do that here. Please remember this. Fine, you lost a little bit of money on this if you tried to trade this. Maybe you won a little money on this. But let me guarantee, you're not going to consistently be able to perform in these zones. So when you recognize these complex fourth wave corrections in the future, stay away. Okay, and that's going to take some discipline. That's going to take some resolve on your part. But if you want to be a profitable trader, remember, it's not about one trade. It's not about winning one trade. It's not about sort of hitting the lottery. It's about being consistent and developing a system that fosters consistency and consistent winning. Then that's how you make consistent income doing this. That's how you can make it a career, right? And that's how you can walk away from the market after compounding your gains over a period of time, right? So this is my biggest takeaway from yesterday. All right, now a note about this complex correction here. And I said this over a few videos, and for those of you who are new subscribers, welcome. Thank you very much for joining the community. This is a community where we learn. The more we make, or the more we learn, the more we can make. Okay, so knowledge is power, is bankroll, and so this is why we're always teaching, we're always learning. I'm always learning. I literally come every single day with new skills, with new understandings, with new insights in the market. And this is what I've recently learned. One, not to rely on complex corrections which are characterized by their capriciousness, characterized by their craziness, their randomness, to be regular, to follow certain rules to the T. Okay, and this is another thing, and I'm sorry, I'm not going to apologize, because this is literally how you get better trading. It's not so much about the technicals. The technicals are huge, but it's also about understanding. One of the things where I made a really big leap in my trading and charting is when I actually became more precise in my trading and my charting, when I stopped being so when I stopped being so stringent about 100% accuracy, and WD Gann says this, don't look for 100%. And I was looking for 100% here because one of the rules, well, the two simple principles on WXY complex corrections are this: that it should slant in the direction of the correction. So the direction of the correction is upwards, right? So this should slant upwards. Right here, this is looking flat, okay? And basically the rules are that X should retrace about 50 to 61.8% of W, right? Which we didn't really get here. And that Y should end, so the end of Y should be 100 to 123.6% of W. So basically, Y should end slightly above W, and X should end slightly above the origination point of W. So you should get kind of a slanted parallelogram. We didn't get that. What we got is more of a flat, regular looking correction. It took a while, right? So it's characterized as complex. And what did I do this morning, or last night and this morning? I did more research. No issues, no sort of compunction in continually doing research. W.D. Gann, the year before he died, was knee deep into research. This is a guy who had a 92.5% win rate, who amassed something like some people say 50 million, some people say 500 million. I don't know which it is, but he amassed a fortune in that time's money on trading alone, okay? And he was doing research basically until the day he died, okay? So there's no issue in our doing research as good as we think we're getting, as precise as we think we're getting, as clear as these charts seem to think or seem to be for us to read and to project. Keep doing your research. So I opened up Prechter and Frost. So Robert Prechter, if you all don't know, is a legendary Elliott wave trader. And his book has 10 editions, just so you understand. It's called Elliott Wave Principle. The book I use mostly, it's called Elliott Waves Made Simple. You can find that on Amazon. I like that. I prefer that. But if you really go deep into Elliott wave theory and you master Elliott Waves Made Simple, I recommend going into the Prechter and Frost book. It's like the sort of canon on Elliott wave theory, aside obviously from Ralph Nelson Elliott's own works, which I also like to read. Okay, now in the book he says, and this is the word I was kind of honing in on, complex waves. First and foremost, complex waves you get usually in the fourth wave if you have a simple two-wave correction. We already talked about how we thought the two-wave was simple. One, because it lasted for less time than the fourth wave correction lasted, so that makes it relatively simple. And then the second being you have a series of complex corrections, and complex corrections are basically just a bunch of simple corrections intertwined, all right, nested within one another. That makes this complex, okay? So this is complex. Now, the word they use in the book is, and also in Elliott Wave Simple, usually, meaning not 100% of the time, but usually you get W as being X being 50 to 61.8% of W, and then Y being 100 to 123.6% of W. Usually, we didn't get that here, and for those of you who are new to the channel, this is important. Why? Because the precision that you use in trading is your edge, and that makes things more clear. And when you have precise guidelines to follow, you can make calls, you can make trades, you can know what to expect before it happens. So what I was doing myself is I told the community, expect us to go at least to break this high, because W came up here, right? Let's say on this chart it's 59,872 or whatever. W came up here. Expect Y to breach the high W made, because that was what the rule stated. But so I was waiting and actually longing. I don't know why I was trading this. I learned the hard way. I got stopped out a couple times. for minimal losses, but still it was frustrating. And I was looking at price going down. I'm like, this is the most annoying price action, and I was fighting price action because I had a prejudice. I had an understanding that this needed to happen, and that has to happen before the dump. I knew we are going to get a dump to 52.6, right? And I'm still waiting to take profit on that. I'm in a trade. I'm in two trades. I'm in an Ethereum short, and I'm in a Bitcoin short, both like 200% into profit. I knew that was coming. I knew that was coming weeks ago, right? Yet and still, because I told myself that Y invariably had to go, in my mind, it was 100% of the time, has to go and break the high that W made, I was not going to get into a short until I got that high. Okay. And that's a mistake. And that's something you learn, because the operative word is usually, not all the time, usually this happens. But if you look at price action, and WD Gann talks about this, look at what's in front of you. Don't fight it. Look at what's in front of you. And if you have reason to believe that something's not happening, although it should happen and it tends to happen, then you change your hypothesis and you say, okay, it's time to short. The impulsive wave has started, okay? And so this impulsive wave, as you'll see, is called an impulsive wave for a reason. All this took 6.5 days. This, a move that already gave us 10%, took all of, we're on the 4-hour chart, 12 hours. That's it, right? So this is why we trade impulsive waves. This is why we don't mess with corrective waves. We actually use corrective waves for entries, okay? For those of you who are new, I repeat this all the time. Trade the trend. Use corrective waves for entry. If this is a downtrend, use this wave as a way to enter this trade there. But don't try to trade this up and down, okay? Don't do that. Well, you can, but you'll find out the hard way why you don't do that. All right, so that's pretty much it. Two things. We are clearly in what seems to be the complex wave of this wave 5, okay? We're on the 4-hourly chart, so we can't see much definition. Let's go into smaller time frames, and we'll see, indeed, that here you get your 2 wave, and you get your third wave. Or is this? Yeah, I think, well, no, this is your pivot. This is your 2 wave. Here you're in your 4th wave. So your 2 wave was simple. Your 4th wave is going to be complex. It's going to last a little longer. Some people who don't know much about charting, who don't know much about price action, may think that, oh, the correction's over, let's buy. No, there's one more leg down. Remember, the 4th wave is always the trickiest. It's the one that makes you think the impulse is through, but it's not yet, okay? So the 4th wave correction is going to take a little time. Then there's going to be another drop. And that drop is most likely going to come to 52.6. Why do we know that? 52.6 on this chart. Okay, what I would suggest you do is take your Fibonacci retracement tool. Take the low. Let me go on a higher time frame so I can get some better catching on this magnet. So you take the Fibonacci retracement tool, right? Take the low of the complex 4th wave correction, take the high of the complex 4th wave correction, and your projection, the most accurate projection here is going to be the 1618. If you're in a trade, take profit right above it, okay? Because you never know, you might wick so quickly to it and it may not catch your order. So my profit is set right above the 161 inverse 1618. On this chart, it's 52.062, but on my exchange, it's 52.6, I believe. Okay, so that's where I'm expecting to take profit. Don't lose this trade. A way you can lose this trade is to not take profit in time, because what happens after this, we all know this, right? After 5 waves, what happens? Your trend is exhausted. What does that mean? For those of you who are subscribed to the channel, you'll know that if we're in a downtrend, that means selling happened. Selling, boom, selling, boom, selling. Once the trend is exhausted, what do you think comes next? The buyers step in, the bulls step in. No more sellers to be found after the 5th wave. That's the practical or fundamental kind of definition of an exhausted 5th wave. And then boom, you're going to get a quick A wave for your two wave, okay? Because you're gonna get a two wave correction. A, B, C, boom, and you can expect this to come to the 618. So we can expect Bitcoin from this correction to run back up until around 62.5, okay? And in an ABC correction. Are we going to trade this? Because it's part of a larger degree, yes, I'm going to trade at least the A wave. Okay, I'm going to trade the first sort of motion of this because it's substantial gains. Okay, it's probably going to be a good, the first wave may give you 12%, 13%, or even maybe 16%. So I'm going to trade that. I'm going to long Bitcoin after we do our little pitchfork reversal. Remember, price doesn't reverse on a dime, okay? It's going to take some time, but what you should look for is the pitchfork pattern, which I call it. It's basically a series of correction. It's going to look like this. So A, B, and then C, and then that. And if you want to be safe, long, so wait for this, wait for the one wave that's impulsive, and you'll know that it's kind of there. It's the one wave because it's going to retrace significantly into the fourth wave region, okay? And then wait for the pullback on the two wave of this impulse, okay? That's what you should do, right? Because the A wave, we all know, is going to be comprised of a five wave impulse, in addition to a B wave. But wait for the little bit of one wave that you're going to get within the A wave, and then the two wave of that one wave. I hope I'm not confusing anybody, but you'll know what I'm talking about. We'll talk about this more later. We'll have time. I don't think that this may happen overnight, but I don't think so. So I think we will have time to talk about it. But basically, wait for the pullback after a bigger wave. Wait for the pullback. Make your entry. That's a safe entry, so that you don't get mistakenly pulled into trying to long something that's not yet ready to run. Okay, so that's Bitcoin right now. Like I said, I'm in an Ethereum short, and the reason being, I was watching a famous YouTuber, famous sort of influencer in our space, talk about how he was longing Ethereum because he'd seen it break. He's a pattern trader. Most of them are pattern traders. Whoops. And I'm not disparaging anybody. He's a 9-figure guy. I mean, he's doing something right, So he's a nice guy too. So I'm not even going to say his name, but he saw this W pattern and he's like, "Ooh, we've got a breakout." And so he traded this. And these are the limitations of certain trading methods, right? Of certain systems. He sees this W pattern and correctly he's trading the W breakout, and the target is supposed to be the height of this W pattern, right? But we know that this is also, in other words, a two wave. So he was talking about this, and I watch a lot of people just to learn and just kind of to know what everybody's kind of thinking, and they have a lot of viewers, so most people are probably following that. And I see this, and I'm like, oh, that's a two wave. That's a great entry. And what do? I trade two waves into three waves. Those are the most profitable impulsive moves. So I got in around here, and I'm trading this to the 1618, right? The entire three wave. So I'm shorting Ethereum. So that's basically the trade I got into. I got a question from a new member of the community saying, what's up with Bitcoin moving and then everything else moving along with it? Why is that? Okay, very quickly, because we only have a few seconds left. The reason Bitcoin makes everything move is called Bitcoin dominance, meaning Bitcoin has most of the market capitalization of crypto, okay? And in the beginning, to buy an altcoin, you had to buy Bitcoin and then convert it to that altcoin. You couldn't buy it with fiat. If you guys were around for 2017, that's how, you would have to buy an altcoin. So I believe it's a combination of Bitcoin being synonymous with crypto, so everybody buying Bitcoin in some measure, and having to buy Bitcoin just to buy altcoins in the past. This is why whenever Bitcoin sneezes, everybody dies. And if Bitcoin moons, things go to Venus. So that's my short explanation. Hope this was helpful. Hope this was useful. Welcome new subscribers. I'll see you guys tomorrow. Trade safe. Goodbye.